Welcome to my channel. Today's class is about dissolution of a partnership firm, that is chapter 5 of plus 2 accountancy. First topic is about dissolution of partnership. Dissolution of partnership means when the relation of partners among different partners changes without affecting the entity or the firm. It is known as dissolution of partnership. That is the dissolution of partnership, only the relation between the partners, that is either in the change in the profit sharing ratio. In this case, the firm's operations will not come into an end. There are certain circumstances in which dissolution of partnership takes place. That is, in the first case, change in the profit sharing ratio among the partners, then admission of a new partner, retirement of a partner, death of a partner, adjudication of a partner as insolvent. That is, he had not paid off his debts, completion of the purpose for which it is formed, expiry of the period for which it is formed. That is, if the firm is we have started the firm for 3 years, then that period is over. Merger of one partnership with another, that is, one partnership will combine another partnership to form a new partnership firm. Then the dissolution of a firm. Section 39 of the Indian Partnership Act states that when the partnership between the partners of a firm comes to an end, it is known as the dissolution of the firm. Then we can see about the difference between the dissolution of partnership and dissolution of the firm. In dissolution of partnership, the relation of the partnership among different partners changes. In the dissolution of the firm, partnership between all the partners of the firm comes to an end. Then the business is not terminated in the first case, that is, business will not come to an end. Then in the second case, the business of the firm is completely closed. First case, next point is no court intervention, that is, court will not involve or compel the firm to dissolve dissolution of partnership, dissolved by mutual agreement and reconstituted. Then in the case of dissolution of the firm, court may intervene and order the dissolution of the firm. Court may interfere. Then the first case, next point, the assets and liabilities are revalued and a new balance sheet is prepared. Then second case, assets are sold, liabilities paid off and balance utilized towards settlement of partners. Then next point, books of accounts are not closed as the business is not terminated. Then second point, then the second case, all books of accounts are closed as business is terminated. Then next point, economic relationship still continues but with some changes. Economic relationship among the partners comes to an end. Then mode of dissolution of a firm. How many ways in which dissolution of a firm takes place? The first case is dissolution by agreement. According to section 40, a firm may be dissolved when all the partners give consent for the dissolution or as per the terms of the partnership agreement. Then second case is compulsory dissolution under section 41. A firm is dissolved compulsory in the following cases: where all the partners or all except one becomes insolvent or insane. Insane means not of strong mental health. When the partnership business becomes illegal, where all the partners except one decide to retire from the firm, where all the partners or all except one partner die. Then third case is dissolution in the happening of certain contingencies, certain situations, according to section 42. In the absence of an agreement to the contrary, a firm may be dissolved in the following cases: that is, on the expiry of the term of the firm, on the death of the partner, on the adjudication of the partner as insolvent, on the completion of the venture for which the firm was constituted. Then the fourth case is dissolution by notice according to section 43. In case of a partnership at will, the firm may be dissolved by any partner giving a notice in writing to all the other partners of his intention to dissolve the firm. Then dissolution by court according to section 44. A court may order a partnership firm to be dissolved in case of a suit by a partner in the following cases. When a partner becomes of unsound mind, then when a partner becomes permanently incapable of performing his duties as a partner, where a partner commits willful or persistent breaches of agreement. This, he is not working according to the agreement. Where a partner is guilty of misconduct, that is gambling, example gambling, where a partner transfers all of his interest of the firm into a third party. Transfer of interest is not permissible in the case of a private firm. Partnership is a private firm, so it is not tolerated. Where the business of the firm cannot be carried on except at a loss. Where the court regards dissolution is just and equitable, it's compulsory, that is, court thinks that it is needed, it is compulsory to dissolve the firm. Then next is about the settlement of accounts. Then in the case of firms, debts and private debts, personal debts of the individual partners should be paid first out of their private properties, and if there is any surplus, it can be utilized for the payment of the firm's debts. Similarly, the firm's debts are paid first out of the firm's assets, and the balance, if any, should be distributed to the partners, and this may be used to pay their private debts. Then accounting treatment, how many accounts are prepared in the case of dissolution of partnership firm. First is realization account. In the case of admission or retirement of a partner, we prepare revaluation account. In the dissolution case, we prepare realization account. Realization account is a nominal account. Nominal account means the debit side it will be recorded all expenses and losses, and the credit side will be recorded all incomes and gains. It's a nominal account prepared for the purpose of closing the accounts of assets and liabilities, and for finding out the profit or loss on revaluation of assets and payment of liabilities. All assets except cash, bank and fictitious assets are transferred to the debit side at book values, and all the external liabilities to the credit side of the realization account. Provisions against asset must also be transferred to this account. Amounts realized on assets are credited and liabilities paid are debited to this account. Expense of realization is debited. This account will be closed by transfer of the profit or loss, that is balance of in the account, to partners capital account. That's all for today. Thank you.